My name is Raymond. For 11 years, I was head of structured credit at Meridian Capital Partners. Between March and November 2009, I placed 34 short positions on sovereign debt instruments issued by 3 European governments: Greece, Portugal, and Ireland. The positions were structured through 7 separate entities to avoid single counterparty reporting thresholds. Total notional value, £2.3 billion. The information underpinning the strategy came from a contact at a European finance ministry who told me the timing and scale of debt restructuring discussions that were not yet public. The trades generated £412 million in profit between June and December 2009. In 2010, the Financial Conduct Authority opened an investigation. In 2014, they closed it without action. Insufficient evidence to prove market abuse. I retained my license. In 2023, I asked whether the investigation could be reopened. It could not. I am going to describe what I did, what I knew, what the investigation found, and then I'm going to describe the gap between those 3 things. The gap is why I am here. The first position was placed on March 19, 2009, a short on Greek sovereign debt. Notional value, £450 million. Structured through an entity registered in Luxembourg. Execution time, 6 minutes. The call had come the night before. Not to my office line, to my mobile. A voice I knew. We had met 7 years earlier at a conference in Brussels. We stayed in touch. He said, "We are moving on Greece, 6 months, maybe 8. The restructuring is not public yet. It will be." I did not ask how he knew. I knew how he knew. He worked in the ministry. He was describing internal discussions. I said, "Thank you." He said, "This is just between us." I said, "Of course." I placed the first position the next morning. The second position, April 7th. Portugal. The third, May 2nd. Ireland. By November. 34 positions across 7 entities, each position below the threshold that would trigger consolidated reporting to the regulator. That was not an accident. The restructuring announcements began in June. The positions moved as expected. By December, £412 million. Meridian Capital Partners took its share. I took mine. No one asked where the information came from. No one needed to ask. The investigation opened in March 2010. A journalist had written about the positions. The FCA sent a letter. We provided documents. I was interviewed 3 times. The interviews were formal, recorded. I was accompanied by counsel. They asked, "Did you have information that was not public?" I said yes. They asked, "What was the source?" I said, "A contact in the European finance sector." They asked, "Can you be more specific?" I said, "I would prefer not to identify the individual." They asked, "Was the individual aware the information would be used for trading?" I said, "I do not believe so." That answer was true. They asked, "Did you structure the trades to avoid reporting thresholds?" I said, "I structured the trades in a manner consistent with the firm's usual practice." That answer was also true. They asked, "Did you believe the trades constituted market abuse?" I did not answer immediately. My counsel interjected. We took a break. When we returned, I said, "I believed the trades were legal under the applicable framework." They asked, "Is that the same as believing they were not market abuse?" I said, "I am not sure I understand the distinction you are drawing." The investigation lasted 4 years. In April 2014, I received a letter. one page. It says, "The available evidence does not meet the standard required to establish market abuse under the applicable regulatory framework. The investigation is closed. No further action will be taken." That sentence is true. It is also insufficient. I still hold a financial services license. I have not used it since 2015. I will not use it, but I hold it. I have thought about surrendering it voluntarily. I have not surrendered it. Surrendering it would be an admission. I want the admission to be accurate. Surrendering the license would say, I did something wrong. I want to say something more specific than that. I did something legal. I knew it was wrong. Those are not the same statement. The law uses the phrase market abuse. The test is specific. Did the person possess inside information? Was the information used to trade? Was the trade likely to give an unfair advantage? Those are questions of fact. But there is another question. A question the law does not ask directly. Did the person know? Not, did they know the information was inside information? The law asks that. I mean, did the person know what they were doing? I knew. I knew when I placed the first position. I knew when I structured the entities to stay below the threshold. I knew when I answered the FCA's questions in a manner that was true, but incomplete. I knew the entire time. That is not the same as, I knew it was illegal. I did not think it was illegal. I still do not think it was illegal. But I knew it was wrong. There is a moment in the second interview. The FCA investigator asks, "Did you consider the impact of the trades on the market?" I said, "The positions were small relative to overall market volume." He said, "The positions generated £412 million. That is not small." I said, "The profit does not change the relative size." He wrote something down. He did not ask a follow-up question. I have thought about that moment many times. The profit does not change the relative size. That statement is technically accurate. The positions were small. The market was large. The impact on price was marginal. But the profit was £412 million. That money came from somewhere. It came from people who did not have the information I had. That is what market abuse means. Not, you broke a rule, but you took money from people who did not know what you knew. I have thought about those people. I do not know who they are. Pension funds probably. Insurance companies. Institutional investors managing other people's money. The pensioners. The policy holders. The people who trusted someone else to manage their risk. I took £412 million from them. Not directly. Through the mechanism. Through the market. Through the structure. But I took it. The law could not prove I abused the market. I know I did. The contact was not a corrupt official. He was not paid. He did not know the information would be used for trading. He believed he was speaking to a friend about a difficult situation. He was speaking to someone who traded on what he said. He found out in 2011, after the investigation began. He ended contact immediately. He has never spoken to me since. I have thought about him more than I have thought about the trades. He trusted me. I used that trust to make £412 million. The investigation never identified him. That was not an accident. I was careful about what I said to investigators. I told the truth about the trades. I was less complete about the source. I did not lie. I was incomplete. In 23, I called the FCA. I asked whether the investigation could be reopened. The person on the phone was polite. They said, "The investigation is closed. The closure is final." I asked, "What if new information became available?" They said, "What new information?" I did not answer immediately. They said, "If you have new information relevant to the case, you can submit a voluntary statement. We will review it." I said thank you. I ended the call. I opened a document on my laptop. I have been writing it for 2 years. It is 4 pages. It is not finished. The statement describes what I did, what I knew, the gap between what the investigation found and what actually happened. It is more specific than the answers I gave in the interviews. It names the mechanism I used to avoid the reporting thresholds. It describes the conversations I had with the ministry contact. It explains why I structured the entities the way I did. It does not name the contact. I have written that section 6 times. I have deleted it 6 times. If I include his description, not his name, but enough detail that the FCA could identify him, the statement becomes complete. It also becomes something else. It becomes a confession that implicates someone who did not know he was part of the crime. I have spent 2 years trying to write a sentence that is both accurate and fair. I have not found that sentence. The license sits in a drawer. The letter from 2014 sits on the desk. The statement sits on the laptop. I am 63. I do not need the license. I do not need the money. I do not need anything the financial sector could offer me now. What I need is a way to say what happened that does not destroy the one person who had no idea what I was doing. I have not found that way. Last month, I drafted an email to the FCA. I attached the 4-page statement. The section about the contact was still blank. I did not send it. 2 weeks ago, I filled in the blank section. I described the contact in sufficient detail. I read it twice. Then I deleted the attachment and closed the draft. Yesterday, I opened the email again. The draft is still there. No attachment. This morning, I received a letter. Hand-delivered, no return address. Inside a single page, printed unsigned. It says, "I know what you are trying to do. I know you have been writing the statement. I know you have been trying to find a way to confess without naming me. There is no such way. If you send the statement, they will identify me. If you do not send it, you remain complicit. Either way, one of us is destroyed." The letter continues. I have thought about this for 2 years, longer than you have. I am the contact. I am also the one who called the FCA in 2023 and asked if investigations could be reopened. I have my own statement. 4 pages. Finished. I sat at the kitchen table for 40 minutes. The letter in front of me. My statement on the laptop screen beside it. I read the letter again. Then I understood. The contact had written their own confession, not to protect me, to control the narrative before I could. If they submitted first, they would determine what the investigation focused on. They would choose which transactions to highlight, which conversations to include, which details to omit. My statement would become supplementary, reactive, a response to their version. I had spent 2 years trying to protect someone who was preparing to define my culpability. I need to go back now, to the specific events, because the abstraction has allowed both of us to avoid what actually happened. June 2019, Tuesday afternoon. The structured credit floor at Whitehall Capital. I received an internal message from Sarah Kemmer, Junior Analyst, Credit Derivatives Desk. She had been with the firm for 11 months. The message said, "Raymond, do you have 5 minutes? Something in the Nordis portfolio does not reconcile." Nordis was a Swedish infrastructure vehicle. We held 3 tranches. Standard exposure. Nothing unusual in the quarterly reports. I told her to come to my office. She arrived with a laptop and a printed spreadsheet. She sat down. She did not look nervous. She looked certain. She said, "The underlying collateral in Nordis Tranche B is being reported at 98% of par. But the actual market pricing on the component bonds is 89% to 91%. I have checked the reference data. The discrepancy has existed for at least 8 months." I asked her if she had mentioned this to her line manager. She said, "Not yet." I wanted to confirm I was reading it correctly. I looked at the spreadsheet. She was reading it correctly. If Nordis was mispriced, the entire portfolio valuation was overstated. If the portfolio was overstated, our leverage ratios were incorrect. If our leverage ratios were incorrect, we were potentially in breach of the capital adequacy framework. This was not a minor reconciliation issue. This was the kind of issue that triggers an internal audit, which triggers an external review, which triggers regulatory scrutiny. I told Sarah I would look into it. I asked her not to circulate the spreadsheet until I had reviewed the valuation methodology with the risk team. She said, "Of course." She left. I did not contact the risk team. I contacted Marcus Halford, Chief Financial Officer. I sent him the spreadsheet with a 1-line message. "We need to discuss this today." He called me 6 minutes later. He said, "How many people know about this?" I said, "Just the analyst who found it, Sarah Kemmer." He said, "Keep it that way. Do not forward anything. I will come to you." Marcus arrived at 4 p.m. He closed the door. He sat down and opened his own laptop. He pulled up the Nordis valuations going back 18 months. He said, "This was flagged internally in December 2018. The valuation team argued it was a temporary liquidity issue in the underlying bonds, not a fundamental mispricing. Risk accepted that assessment." I said, "But it is April 2019 now. The liquidity issue has not resolved." He said, "No, it has not." Marcus looked at me for a long time. Then he said, "If we revalue this now, the portfolio drops by 140 million. We breach our Tier 1 ratio. The regulators will require a capital raise. The share price will collapse. We will have to disclose why we did not catch this earlier." I said, "We did catch it earlier, in December. Risk signed off on it." He said, "Risk signed off based on information the valuation team provided. If that information was insufficient, the responsibility sits with the valuation team, and the valuation team reports to structured credit." That was the moment. He did not say, "Falsify the records." He did not say, "Conceal the discrepancy." He said, "The responsibility sits with structured credit," which meant the responsibility sits with you. I said, "What are you proposing?" He said, We phase the revaluation over 3 quarters. We cite deteriorating market conditions. We take the hit incrementally. No one connects it to a mispricing that existed in 2018. No one asks why we did not identify it earlier. No breach, no capital raise, no disclosure. I said, that requires misrepresenting the valuation in the interim reports. He said, it requires using discretion in our pricing methodology. We have discretion. The models allow for it. I said, and Sarah Kemmer? He said, tell her you reviewed it with risk. Tell her the discrepancy is a known pricing lag in illiquid instruments. Tell her it is being monitored. She is an analyst. She will accept that. I did not say yes. I did not say no. I said, I will need to see the revised model. He said, I will send it tonight. He left. I sat in my office until 7 p.m. I did not open the revised model when it arrived. I went home. The next morning, I called Sarah Kemmer into my office. I told her I had reviewed the Nordis pricing with the risk team. I told her the discrepancy was a lag in mark-to-market pricing for illiquid bond components. I told her it was a known issue and was being monitored. She said, so the 98% valuation is accurate. I said, it is accurate within the modeling parameters we use for this asset class. She said, okay, thank you for checking. She left. I opened the revised model Marcus had sent. I reviewed the phased revaluation schedule, quarter by quarter. Plausible deterioration in market conditions. No single quarter large enough to trigger a disclosure threshold. I approved it. 3 weeks later, Sarah Kemmer resigned. She took a position at an asset manager in Edinburgh. I wrote her a reference. It was positive. I did not think about her again until the investigation began. The FCA opened the inquiry in May 2021, 2 years after the Nordis mispricing. They were reviewing capital adequacy breaches across the sector during the pandemic volatility. Whitehall Capital was not initially flagged, but a routine sampling of our 2019 portfolio valuations identified anomalies in the Nordis repricing. They asked for contemporaneous documentation. The revised model Marcus sent me was in the files. My approval was attached. They asked who had identified the original discrepancy. I said, an analyst on the credit derivatives desk. They asked for the name. I gave them Sarah Kemmer's name. They interviewed her in August 2021. She told them exactly what I had told her, that the discrepancy was a known lag, that it was being monitored, that I had confirmed this with the risk team. She had no reason to lie. She believed what I had said. The FCA concluded that I had misrepresented the risk assessment to a junior employee in order to prevent internal escalation of a material mispricing. They concluded that I had knowingly approved a phased revaluation designed to avoid a disclosure breach. They concluded that I had acted with intent to deceive the regulator. Marcus Halford was not charged. He had sent the revised model as a proposal. I had approved it. The decision was mine. Sarah Kemmer was not charged. She had reported the discrepancy. I had misled her. The responsibility was mine. I accepted the findings. I accepted the prohibition order. I accepted the fine. I did not contest any of it. Because contesting it would have required me to say, Marcus Halford designed the phased revaluation. Marcus Halford told me to mislead Sarah Kemmer. Marcus Halford made the decision. And that would have been true. but it would also have destroyed the one person I believed had done nothing wrong. Sarah Kemmer. If I named Marcus, the investigation would reopen. They would re-interview Sarah. They would ask, "Did you understand that Raymond Cross was lying to you? Did you suspect the valuation was false? Did you have any reason to believe the discrepancy was not being monitored?" And eventually they would ask, "Did you resign because you knew something was wrong?" Even if she said no, even if they believed her, the fact of the question would follow her forever. So I stayed silent. And the letter I received yesterday tells me that Sarah Kemmer has been carrying the same silence, for the same reason. She is the contact. She did suspect. She did know something was wrong, and she has spent 4 years deciding whether to destroy me in order to tell the truth. Her statement is finished. Mine is not. I do not know what happens now.